let's look at the DXY. So we have the DXY pulled up. The DXY is the chart that tracks the United States dollar, the US dollar index. So basically, as the DXY increases, the strength of the dollar increases, and generally speaking, equities sell off as people, move into the strong dollar. As the DXY sells off or decreases and moves down, usually equities do well. Stocks and cryptocurrencies soar as people move away from the weakening dollar into assets like these equity markets. So what you have pulled up here is actually an example of a Wyckoff redistribution, and that's kind of what we're seeing. At least that's what it's starting to look like here on the daily chart, and you can see that the market down is the way that the Wyckoff distribution pattern plays out. So we're looking for this pattern to play out.
I think it's a weekly chart. Yeah.
Oh, you're right.
It's the weekly chart. Yeah. But yeah, you're right. Like the distribution schematic, like this is what we have for reference on the right side. Usually, I mean, it can be variations of, how it needn't exactly look like this. But the point being is like, you kind of have 3 highs. So this would be 1, 2, 3. So 3 highs. And then like after the 3rd high, you get, you try to make another high. The price tries to make another high. In this case, it got rejected on our strength band, our indicator strength band. So this is our custom indicator. And we've said this in the past, the way it works is that usually in a bull trend, it acts as support. So you can see here how it acted as support and price just kept going up. And in a bearish trend, it tends to act as resistance.
Yeah.
So it got rejected there.
It's interesting to see that breakout too there at the UTAD section of the redistribution.
Oh yeah, here. Yeah, you can see that's like, this is typically a range, and then this just it breaks out. It's a fake breakout to basically trap all the bulls.
Yeah. It's fun to see that in the schematic. You can see that it is like a breakout of the upper limit of the range, and then it's visualized. Those ranges are visualized by our indicator, where it actually flipped to green when it broke the upper range of that. So it very much is looking like this Wyckoff redistribution, and you can see that even more recently, where we did get our bear print on the weekly, and then when we did retest the strength band, we were rejected. Even if we know nothing about technical analysis patterns or Wyckoff distribution patterns, just using the indicator would have been the perfect call to enter a short position on dollars, or go long equities, where you see it with the bear print, with the indicator having the red band color, so the bear print matches the color of the band, and we're being rejected. That is kind of like basically that would be the start of the market down. So then it's just fun to see it like side by side here with the textbook example of the image, because it's really kind of clean at least from what I'm looking. It looks very 1-to-1, like very textbook right now.
Yeah, for me too. Like it looks really similar. I think like the fall off confirmation happens, I think, after we lose the support. Like you see the bottom of this range, which kind of acts as support. So like this is actually the $100 price. Like 100 has been a support for quite a while, I think. So you can see wick here, wick here, wick here again. So I think like if it loses 100, then I think then the markdown phase is going to happen, where the sell-off accelerates.
Yeah, so, and that will be wonderful for us in the stock markets and in the crypto markets, because as the DXY, like we said, starts to sell off, people are going to be using their money to buy into equity assets. And so generally speaking, there is that inverted relationship between the DXY and the equity markets.